Welcome to ForexTV.com's PM Exchange. It's Tuesday, November 27th. I'm Remy Hoki. Today I'm joined by David Powell from IDEAglobal. Good afternoon, David.
Good afternoon, Remy.
Thanks for joining us today.
Pleasure to be here.
Well, in today's session, we saw the U.S. dollar strengthen against the euro and the yen, and earlier in the session against the Swiss franc as well as sterling. And we also saw U.S. equities advance, and they're managing to hold on to gains at the end of the session. Now, going into tomorrow's morning New York session, do you expect the U.S. dollar to hold on to gains against the euro?
Right. Well, you are correct that the U.S. dollar did strengthen a bit, but really, if you look at the price action across the board for the majors today, the dollar was somewhat sidelined, as the biggest movers were actually the high-yielding anti-protein currencies of New Zealand and Australia, and also the Japanese yen. As you mentioned, the U.S. equity market recovered in the aftermath of the news from Citigroup, and as we've seen for the past several weeks and months, the yen, along with the higher-yielding currencies, continued to correlate with the movements in the U.S. equity market. However, the data today was clearly U.S. dollar negative, which underscores the fact that we shouldn't let today's advances in for the dollar distract us from the fact that the dollar's downtrend remains firmly in place, and today's gains for the U.S. dollar are likely to be temporary.
And indeed, it looked as though the market wasn't paying that much close attention in terms of dollar movement, in terms of the data out today. But starting tomorrow, we're going to have a slew of economic data out from the U.S., especially on housing. And you mentioned the yen, which has pulled back against the euro and the dollar. So going into tomorrow's session, what price action do you expect to see in euro yen as well as dollar yen?
Right. Well, the dollar yen is likely to hold on to gains, with the U.S. Stock market closing up today and holding on to some of its gains. The next levels of resistance for dollar yen come in around 109.15, 109.55. However, we do not expect dollar yen to make a decisive break above 110. As long as we remain in these kind of levels of increased volatility, and since dollar yen's break below that level. So we also expect the yen sell-off to be temporary, or not so much temporary, but not sustained or exaggerated to a much greater extent. And on the euro-yen cross, we would expect something similar.
Okay, you mentioned the commodity currencies of Aussie and Kiwi, but let's take a look at dollar CAD first. It briefly reached parity this afternoon here in the New York session at $1, and it has come back down around 99.70. So in terms of going forward into the coming session, what ranges do you expect to see for the dollar against the CAD?
Right, well, as you did mention, the Canadian dollar did again reach parity against the U.S. dollar for the first time since the first week of October, in fact. And we would expect, with the dollar CAD's break above the 95 level, for it not to return to that level, below that level, which was a very extended move. And we believe the kind of fundamental fair value for dollar CAD would be around 103. So for a kind of end of year, first quarter range, we expect the Canadian dollar to remain in the area of about 95 to 105. And in terms of the more near term than that, it's kind of at a very decisive moment now, whether the pendulum swings and leaves dollar CAD below parity or above parity. And once we establish a more clarified price action, will likely be within a five-figure range of parity.
And now that we've covered the dollar against the Canadian currency, if you could give us your forecast with the U.S. dollar against the Aussie as well as Kiwi.
Right. Well, we think the outlook for both of those high-yielding commodity currencies remains supportive, especially the Australian dollar, where the economy continues to run above potential, and the risk is certainly for further interest rate hikes from the Reserve Bank of Australia, which the market is already pricing in. And we would expect further gains of 2 to 3 figures in the near term for both of those currencies, and that would leave Aussie dollar around 90 the figure over the coming weeks.
And one last currency pair I want to touch on is euro sterling. We did see a pullback, so do you think this is a corrective move you're seeing right now?
Right. Well, the 72, the figure, does represent a multi-year high from 2003 for that cross. However, the outlook for the euro is much more supportive than the British pound, where we have seen coming from the BOE signs that the next move will certainly be down for interest rates in the UK, and most likely in the first quarter of next year. And that leaves us looking for further advances over the medium term for euro sterling. And the next obvious level would be about 73, and therefore we don't see this kind of minor pullback as being anything more than that.
Okay, and last but not least, now that we've covered the major currency pairs as well as the crosses, if we could take a look at the data front here in the U.S. Starting tomorrow, as I mentioned earlier, we do have a slew of data, but let's take a look at the Fed rate outlook and also the Fed's Beige book, which will be coming out tomorrow afternoon. Given the state of the U.S. Economy right now and also the housing market downturn, I just want to get your take. Goldman Sachs did release a forecast and estimated the Fed funds rate to fall to 3% by mid-2008. What's your take on that, David?
Well, the data coming out tomorrow is likely to point towards further weakness in the U.S. economy. The existing home sales data is expected to show yet another month of decline, and also the Beige book is likely to reveal that tightening credit standards have had an effect on the real economy. And of course that will be quite important because the Fed has emphasized that they're putting more weight on soft survey data now, which is more forward-looking, to determine the effects of the summer credit crunch and tightening credit standards on the real economy. So with the risk certainly being to the downside for the U.S. data on Wednesday, it does not bode well for the dollar, and it could be a catalyst for a return or a test of the 150 level on euro dollar. In terms of the longer term multi-month outlook, we are not looking for a recession, but we certainly can't rule out the probability. We attach something about a 35 or 40% chance to a recession. Nonetheless, we think that in the first half of next year, the Fed will be taking out insurance against a recession, and we look for another 4 cuts by the middle of next year, which would leave the Fed funds rate at about 350. But we believe that'll be enough to avoid recession. Nonetheless, the implications are dollar negative.
Okay, David, as always, thank you very much for your insight and analysis.
Anytime.
This has been your Forex News with David Powell from IDEAglobal. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks bounced back in the session and held on to its gains. Wall Street rebounded after the Abu Dhabi Investment Authority said it will invest $7.5 billion into Citigroup. In another volatile session, the market was hopeful that the financial sector can stay healthy despite the ongoing credit crisis. There was some relief in the equity market, but data shed light on the economy. The National Case-Shiller Price Index found prices fell 4.5% nationally during the past year. And the Conference Board reported that U.S. consumer confidence fell in November to 87.3 from 95.2. At the end of the session, the Dow Jones Industrial Average gained 1.7% or 215 points to close at 12,958.44. The Nasdaq advanced 1.6% or nearly 40 points to end the session at 2,580.80. And the S&P 500 added 1.5% or 21 points to close at 1,428.23. In the fixed income market, U.S. Treasury bonds saw a sell-off after yesterday's rally. As U.S. equities gained on news of Abu Dhabi's investment in Citigroup, this eased worries about the overall financial sector. The benchmark 10-year Treasury bond fell with the yield up at 3.948%. The 30-year bond was down, with the yield up at 4.363%. And in energy, NYMEX crude oil futures declined for the second session in a row. More news regarding OPEC's oil production increase at its upcoming meeting pulled prices lower. January crude ended down by $3.28 or 3.4% at $94.42 a barrel. Earlier, the contract fell to a low of $94.30. This is the lowest closing price since November 19th. And in other petroleum products, December RBOB gasoline fell 6.84 cents to close at $2.3730 a gallon. December heating oil fell 5.32 cents to end at $2.6534 a gallon. Meanwhile, December nat gas futures ended down by 17.4 cents at $7.549 per million BTU. Over in the metals complex, gold futures tumbled almost 2% as crude oil prices fell and as the U.S. dollar firmed. December gold fell $12.50 to end the session at $800.14 an ounce. It hit an intraday low of $808. And in other metals, December silver fell 34.5 cents to close at $14.485 an ounce. December copper fell 6.05 cents, ending at $2.9625 a pound. This afternoon, we're joined by Bobby Firestone, analyst at Aileron Trading. He'll give us his short-term outlook for NYMEX crude and COMEX gold futures.
Well, we've seen crude extend yesterday's slide. We're trading below 95 a barrel right now. Now, overall, most of the news is ahead of the OPEC meeting next week. We had an Iraqi oil minister say that there's talk about 500,000 barrels of increased production for next week, or, well, that's what they're proposing at the meeting for next week. Increased supplies, that's all well and good. Realistically, we're talking about a price level where we can see $3, $4, $5 swings and it just be noise. From $95 a barrel, I really expect to see it swing up or down $4 or $5, and it really mean nothing. It's going to be a long time before we see the longer-term trend break. What I'm looking for, though, for the rest of the week, I'm looking to see it find a bottom here before the end of the week, rally up, and probably end the week well off of the low that we're probably going to see on tomorrow or Thursday. The second thing I'm looking for is to see the volatility quiet down as we get towards the end of the week as well. In the metals, what can you say about gold? It's definitely not looking quite as shiny here. Without the continued bull run in the energies, looking for a lot more dollar weakness. I think it's a good time to look to sell calls, sell puts, not take any sort of major directional bias in either way.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.